Hi, this is Jack from Alpha Charts with a state of the market video. Today is February 20th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so we're going to start with the SPX like we always do. It was a 4-day trading week, and it wasn't a very good week, right? I mean, it kind of pulled back a little bit. Um, but it pulled back, but the moving averages are all still moving higher. It has not violated any of them on the SPX. Moving to the QQQ, which is more my style. You see the big uptrend. Let's just zoom in a little bit here and take a look at this. If you notice, once again, it came down to try to test the 23-day EMA. It looks like buyers are stepping in. Definitely two nice bars that showed buyers are stepping in here. This one was a little bit, sellers were in control, but all in all, the uptrend is still intact and the 23-day has not been violated again. It's only been violated one time, right, on a closing basis since November. So that's a very bullish scenario, and there's really nothing bearish about it. Now, that being said, I had a rough trading week this week. I tend to be in a lot of growth names. I probably bought too extended. I know I did, and I got the market punished me for it a little bit. That kind of taught me a lesson. So that is what it is. But a small pullback like this, if you're in a high beta growth name, that was roughly 2.5, 3%. That's probably double, and that's pretty much what I was this week. I had took about a 6% haircut this week. That was almost 3% there, and I took just over 6%. So that's the way that it goes. I don't ever complain when I'm doing 2 and 3 and 4 times what the market's doing. So on the pullbacks, you're gonna get cut. At least double the market, just the way it is. Anyway, Qs look fine. There's nothing to worry about here. But the star is IWM. Look at the IWM. I mean, beautiful uptrend. Didn't even come back to touch this, moving higher. It's really, really a great looking chart. Qs look good too, but this one is the star. So over here, I pulled up just the sectors that IWM contribute, that contribute to the IWM, and it's an equal weight ETF. And if you see, healthcare is the biggest sector, and healthcare is meh, but industrials and financials make up the next two, and then compute and then information technology. So you see these, and even consumer discretionary, are really pushing the Russell higher, and the sector rotation that happened, this week was really interesting. And you'll see in XLF specifically how it is just, I mean, there was no pullback this week at all. I mean, that's what you call relative strength, right? Market pullback, XLF didn't. It broke out of its gigantic area. I like weekly better on this one. Yeah. So here's the area that we always have been watching, and now it's screaming higher. So I mean, that's a very bullish scenario, right? So when financials are participating, I think that's a huge positive for the market. And so we're going to just digress here for a second and just pull up the 10-year yield. And one of the reasons why financials are going higher is because the 10 yield has really been screaming higher, especially starting into this year. This is where January 1st, right? First trading day was right here, I think. Yeah, so it's big move higher right over here. And now we're getting into this area right here, which is 1.34 to 1.45-ish. This is the area that we got to see what happens. So I would be absolutely fine if this now kind of backs off and chops around a little bit. If we see interest rates break through this area and start moving higher, especially with a trajectory like this, that would make me a lot more cautious overall in the market. That just means the Fed, really can't control rates anymore. They're, and they're they've gone rogue basically, and that would actually be a big problem. So, but that's the 10-year yield. Again, just something I'm watching. It's again not really, I can't say it's actionable, but what it does here is going to kind of set the mood, I think, of the market going forward. So there's that. SMH semiconductors moving higher, closing almost at all-time highs again. Very bullish, nothing to worry about there. Lumber broke out of this area and came back, retested, and now moved higher. Nothing bearish about that. Everything's an uptrend, looking good. Let's look at bonds and bond ratio specifically. And bond ratios, get rid of this volume. Yeah, so bond ratios continue to make lower highs and lower lows. So that's exactly what you want to see, tightening of credit. And so I think that's beautiful. There's no stress in the credit market that I can see right here. So that is looking great. Next up, we're going to look at the VIX. So the VIX is running at a 22.1. Again, a very low stress level. So low volatility level. That looks great. Let's look at the put call ratio, equity only, and you can see it's in a bullish range. Looks amazing. And then the last is value line geometric index. And as you can see, this is a breadth measure, and it is breaking out to just about all-time highs here. So nothing bearish about that. And just going back to the SPX, as you can see, it kind of pulled in a little bit, but the equal weight SPX is actually right at all-time highs. So you can see that this is a broad-based rally. This isn't mega caps pulling it higher. And actually, mega caps are just stuck in a range. Here's Amazon, and I bought some on Friday, unfortunately, at the wrong time. But mega caps are just stuck in this range, right? And so we'll see what happens with those. Even Apple, Apple kind of broke out, and now it's just kind of, not really doing much. Facebook, just stuck in a range. So this is a broad-based rally that's going on. Small caps are leading it, and I think that it's still a bull market. Let's just look at the equal weight QQQ. Yeah, that looks fine. So broad-based rally, nothing to see here. I think that if there's a close below the 23-day and a follow through on the next day, that could change my mind. I think we should keep our eyes on interest rates too. My guess would be they're going to probably pull back, and then we'll see. All right. Well, I hope you all have a great trading week. Hopefully this will be better if you're in the growth stock area for us this week. And take care.